In Stacking Up today, our final trades of the day. Tom White at TD Ameritrade joins me now to talk about Oracle and Adobe. Thanks for coming on the show.
It's good to be back.
You want to start with Adobe?
Yeah, Adobe. So typically into earnings, we'll see a pretty big move in the shares. Its averages, two-year average is about 4.5%. The option market's pricing in about a 5.5% move this time. Stock's just below all-time highs, trading around $106, $105 a share. So we've seen some optimism in there post-Trump election. And going forward, as they expand their business from, it used to just be PDFs, it used to just be Adobe Acrobat, things of that nature, they've expanded into data mining and also the cloud business. So they've really ramped up their offerings.
Do you like this stock?
Yeah, I do like the stock, but not at these levels. It's kind of
too high for you.
It is. I'm one of those value type of investors where I'm waiting for that stock to pull back to get in. Valuations are a little bit rich in there. It's outperformed the tech sector in general, so I'd probably look somewhere else in that sector. But at the same time, the company's growing leaps and bounds, but the valuation's getting a little bit rich above this $105 a share level.
Where would you like to own the stock, buy the stock, trade the stock?
If it gets back down to that $100 a share level, I'd probably take a look at getting in on it. But at the same time, you're going to have to kind of do your homework on the earnings report coming out, and then also the tech summit that happened yesterday with Trump also kind of puts a little bit of volatility into the stock.
Let's take a look at Oracle. Now, the Oracle CEO was the first to say, I'm in, I'm going to meet with the President-elect Trump.
Yeah.
So what do you think about this stock and this company?
Yeah, the stock's actually underperformed a little bit. They've been doing buying. They've been buying other companies, and that's what they do, typically what they do. Since they started inception, 20, 25 years ago. So that puts a little bit of less cash behind them. And by acquiring these companies, they're growing their business, they're getting ahead of the game, but it also kind of hurts their stock performance. Stock's kind of flatlined here, along with the tech sector. The tech sector hasn't seen that boost post-Trump election that maybe some of the other sectors have, financials, industrials, a lot of the defense stocks. So with this stock, I'm cautious, but I think above $40 a share, you can own this company. Pays a great dividend, solid management, and tech's going to probably look up as Trump tries to grow our economy next year.
Now, would you put an options trade on Oracle?
Yeah, definitely. If I'm looking at that name with the dividend paying, I'd probably do something like a covered call, which is a conservative strategy where
option strategy.
Yeah, where I want to own the stock, but then I get to sell some premium against it and
You're
kind
just
of
selling
outperform.
the call?
Yep.
You own the stock?
Yep.
Taking a little money as you go along?
Every month, yeah, and then I'll roll that call out month to month and kind of lower my break-even point, but I still own the shares, which is great because I get to collect that dividend.
Where would you sell the call?
I'd sell the call just above the current stock price, which is just over $41 a share, so maybe the $42, $43 strike, and that's probably out into February and March right now to collect more premium.
Tom, thanks for the Trader Talk.
Thank you.